The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast. Not with Paddy, Pete and Breakeven Steven. You know, it's Steve, Pete and not Paddy.
Yeah. Hi.
Yeah. Guys, I gotta say, good. I gotta say, we can breathe a sigh of relief. It's the weekend, and that means the stock market's closed, so your stocks can't go down. Yes! Do you know what? Saturday and Sunday, I'm so not going to do badly. You know, that's the thing, isn't it?
Yeah. It's depressing, isn't it? Really
well,
is.
Do you know what? I'm going to start off. Normally, I pick up on bits from the WhatsApp chat group. This is Steve today. First of all, I did say to Rich, there's four of us in the chat. Is there five of us or four? Five of us in the WhatsApp chat group. There's Paddy, Pete, Steve, and little Rich, who I used to work with the Capital, with Paddy as well, the Capital in London. Now, Rich has been threatening to get into it. I asked him about 3 years ago, I think, do you want to join the WhatsApp group? Because we talk about investments and stuff, you know, pretty much. Yeah, I'm looking to get into that. So he's got a good job, you know, at heart, I think it is. He's one of the guys there, isn't he? Isn't he Chief...
Amanda Holden.
Yeah, he holds Amanda. Yeah, Amanda Holden, I would. So he's got some spare cash, I assume. I haven't said that. He's got 17 kids, so I don't know if he has got spare cash. But he wants to get involved in investing, and he hasn't done it yet. He set up an account, I think, in ISA. I don't know, I'm asking him questions. Anyway, so I said, Rich, it's a big sell-off happening. The markets for small and micro-cap stocks are dire. This is a good time to get involved. And then Steve, I sort of said something, said, every day a few more grand disappears from the PF. God knows what your PF must be like, just. Not worried, but good to see every day. Not worried, but not good to see every day. And then he said, Rich, I know Justin is always pushing, but now is really good time. I think we all wish we had a little cash now to put in. Get in while the National Stock Exchange's pants are down. Bicep. And so they're Steve, right? I don't know if you know what you've done there, but those two texts are the dilemma of everyone.
Yeah.
Go on.
Well, can you see? Because the market's grinding lower, right? There's a sell-off. There's inflation, growth worries, COVID. These things always happen, you know. And it's an opportunity in a longer term, because you look longer term, you can't day trade, you can't trade. And so at one point you're seeing the value of your portfolio go down. Just a paper loss though, it's not real, isn't it? You know, if you sold now, you'd take that loss on board. But you're not selling now, are you? So don't worry about it. That's the thing. Emotionally, it's hard not to worry about it because you are seeing the value of your portfolio. My portfolio's gone down by more than the value of my house.
Wow.
Yeah,
Wow.
see, that's something you need balls of steel to kind of...
I live in
It's all relative, isn't it? It's percentages.
I live in a cardboard box, by the way, in Cardboard City.
Yeah, good point.
Yeah, no. But, when I think of that, you know, I told Megan, she said, don't tell me, just worry me. You just worry me about it. She said, are you worried the stock market's going down? She's been saying this for the last 10 days now. She's been on for 2 months. And I said, no, because... Steve, what are you doing?
Sorry, I'm just trying to find a battery because my phone's going to go flat. Carry on.
Are you fine? All right. Well, you're shoving through your drawers there looking for a battery.
Well, yeah, literally, because I can't plug in my power thing because the headphone's plugged in, so I've got to stick on a wireless charging mat.
Did you get sacked from your radio job, basically?
Just fiddling around the background.
So we're on air, Steve.
We're on air. Yeah. Sorry, I'm just looking for my packed lunch. I don't know. Has anyone seen a blue bag somewhere? I put a blue plastic bag from Aldi. Yeah. I don't know where it's gone anyway.
Steve, me and the guys have been talking. We're not sure radio's for you.
People are on here. I know it's so annoying, but I made a lovely packed lunch, and I don't know where it's going. Steve brought it here. I know that. Sorry. I'll look quietly. Just ignore me. We can't, Steve. You're making so much noise. It's radio, it's audio. Okay. I'll look quietly. So no, but that's the thing. How do you feel at the moment? Because I'd done episode 3 of the Share Pickers podcast, and I talk about psychology of the market, and I say pretty much 100% it's all in the mind. There's lots of stocks you can pick winners. You can sell at the wrong time, buy at the wrong time. And if you aren't emotionally suited or trained or experienced, or you can't deal with it emotionally, you'll buy at the wrong time, you'll sell at the wrong time, and that's it. So at the moment, I can see Pete panicking a little bit early in the week. He did ask about Gfinity was, grinding lower there. Any news from Johnny boy? Johnny was telling me relax, Johnny boy. Yeah, Johnny boy. Yeah. I'm not worried. Justin, has he said anything?
Can I right to reply? No, I'm not panicking at all. But it's just that, like Steve said, it's just that depressing grind lower, isn't it? It's just like you're like looking for some signs of a turnaround or like what, but. To be honest, the reason I'm looking at Gfinity is that other stocks, like if you're a leisure stock or whatever, with the COVID uncertainty kind of rearing its head a bit and all of this stuff, you could see the impact of inflation, like you mentioned earlier. Yeah, okay. Why would like Gfinity be impacted by any of that? In a way, they should be going the other way, shouldn't they? But it was that frustration of stocks for no rhyme or reason going down. You're like, come on, why is that doing that? That's annoying.
It is interesting, isn't it? The entire market, small cap market, has been rough. And you think, where does this come from?
But
and selling, they get selling. But people who are selling have no idea what they're doing. Generally, honestly, they don't. And the stats bear this out. And I talk about this honestly, I talk about this at length in this episode 3 of my psychology podcast. It's the worst time when a general market sell-off happens. It's the worst time to sell. The very worst time to sell, but people do it. Why? Because most people follow herd mentality. They believe someone else knows a bit more than them. They're selling. I'm going to sell. I'm not going to be left holding the bathwater, the baby, whatever you're throwing out. I'm out of here. I don't care what it is. Now, I said on a tweet earlier, if the share price goes down in the company, the valuation is getting better. So someone's selling because the share price is going down. Someone's buying because the valuation is getting better. Now, which one are you? Now, I'd say the valuation always, the more you look at valuations of a company, the more experienced you are, the better returns you get. If you're just dealing in share prices of a company, we're not looking at the share price, there's some technical issues behind Gfinity's movements. I assume there's some warrant holders who've been doing quite well, and maybe they're seeing a bit of a market turbulence. They're not committed to the stock. They've just got warrants, so they maybe got options because they're previous employees. So they say, there may be a roll over here. So that people like that with low conviction will just get out and they'll sell, So that can happen, I think. And so you see, But like I said, now... it's literally, what is it, less than 4 times next year's forecasted revenue, which for a growing, fast, small cap, media publishing, digital company in the esports space and also esports, that's cheap, And if it continues to go down, it gets cheaper. And so people will be looking at this, and that is actually, and of course, if it stays here, then the year after that, they're growing again they've got 43% compound annual growth they're expected to achieve. That's amazing, And what happens is you get the double barrels of a value where when you get the sort of profitability and you grow, then the multiple the market gives that company grows as well. So if you're like growing by 20% top line revenue, the multiple on those earnings go up as well. So you times that is super leverage. So the valuation is. I always say that I'm trying to look at. I don't know how to help people. Like I said, when I see the value of my portfolio go down by more than the value of my house, of course I'm not unattached from it. I'm emotional about it, and it does get me in a bad mood. I think, for heaven's sake, I think, but you can't. But I'm not going to. Why would I take that loss now? Well, I know full well. For example, let's look at Gfinity. Let's look at Escape Hunt. The 5 I have. I know Escape Hunt's plan is 50 sites, right? I believe they're going to do that. I believe Gfinity are going to get to where the forecasted revenues going, because like a flywheel, they're having more websites, they're monetizing them, they can get more CPMs, and it's going to get bigger and better. Why would I sell now at the worst time?
So with escape hunts, do you know, like through the lockdown, because I know they were buying up sites and they were basically announcing multiple sites. Mm-hmm. Is that going to be a thing that's going to continue, like as we go on? Are they still going to be opening multiple sites in the future?
Yeah, well, do you know what? The other thing about escape hunt right today is it held out quite well the last couple of days, weeks, hasn't it? It's hovered around the 35, 36 pence level, around that level, going out sideways, and then all of a sudden there's a big sell went on late Friday, and it dropped down by 12%. I don't know if you saw that. But now, because I've talked about the story so much, other people have shared this story so much now, there's support there. There's buying support. That's the market. People are buying the value, the future value. And that's what I'm saying. Don't look at the price. Look at the value. I don't think people understand. You can see. I think it's all about time frames, isn't it? If you get carried away with the share price and panic and sell, then you're going to lose, because the fact is you're not looking at the potential that's going to happen. So
is that pretty much what's happening at the moment? Is it just people panicking and selling?
Yeah, because listen, I genuinely believe Escape Hunt will not be a market leader in this country. Globally, I believe they will be a market leader. They've got presence already in most countries. America, I think now, we've got the Delta variant, stats on that, by the way, but the Delta variant's come out. So there's a bit of worry about that. There's a bit of worry about inflation. There's people just selling, liquidity of the summer as well, and all that. But 50 sites, right? I genuinely believe this company will be £2 plus per share in about 2-3 years' time. They will be a global leader in a leisure sector that's just getting hot. You know,
no, you didn't answer my question.
Sorry. What do you say about sites and multiple sites? No, at the moment,
do you think that's going to continue?
They're at 19. They're at 19 sites right now, right? And I think part of me has thought a couple of times that they're going to. I mean, people say. In fact, Paddy said a while back. He said they're not going very quickly on these sites acquisitions. I said, what are you talking about? They doubled their site. They've more than doubled their sites in lockdown when they've had no cash flow, no revenue, nothing at all. And I think right now, I genuinely, I've thought this for a while. I thought, when you're dealing with these big operators, these commercial sites, right? Generally, they own quite a few different properties around the country, don't they? So you are in discussions with the commercial landlords, and they all for example, the landlords of Lakeside, which they've signed, which, let's be honest, and every site they're signing seems to be getting better and bigger and better. You know, Lakeside was the last one. They have 20 million people through that place in a year. They couldn't afford to get that a couple of years back. So they're getting better.
Generally, what they've done is announce one site at a time, haven't they? But would they, like Steve say, go multiple sites now? Will they, start kind of really
ramping up? Yeah.
Because you know what? I think they could, because, like I said, first and foremost, they're dealing with these commercial landlords that own multiple sites across the UK.
Yeah.
Secondly, they are having problems filling these sites, And in fact, I don't know if you watch it, Steve, but on the treadmill this week, I've been watching Young, Welsh and Successful.
I didn't watch it on the treadmill, no.
But Young, Welsh and Successful. You should watch that, Steve. It's all in Cardiff. Lots of Cardiff boys there and girls with businesses.
Is Steve on it?
No, he's not there yet.
Oh.
Next week.
Missed out on that.
But there's a couple of... There's two companies there, two girls, actually, have these novelty cards sort of things. One's quite rude cards or novelty gifts and all that stuff. And they've just... Their online business done very well through lockdown. And they've decided, both of them, to open shopping units, one in Barry, but one in St David's Centre. And I thought, well, if your online business is good, why are you taking it? Because they want a sort of flagship store to show their friends and family doing very well. I've now opened one in St David's Centre. But, and that proves to me, and they said, they can get good rates. Yeah. That proves to me there are commercial landlords screaming out for tenants. Yeah. And I think when you're going to be like something like Escape Hunt, they will even offer you incentives to take a long lease out. So I think because what I'm saying is, I think I've thought this for a while. I'm thinking Escape Hunt could probably do. I wouldn't be surprised if they could announce a couple of sites in one go, or multiple sites in one go. I don't know. I'm just thinking. I was thinking it seems the right time at the right place now. The commercial landlords are screaming out for it. They're welcome. They have multiple sites open. Said, well, listen, why not do a multiple deal? Rather than one site at a time. So
go back to what I was saying about Gfinity, and the same for the Escape Hunt. And the reason, and I wasn't panicking because I haven't sold at all, so I'm not panicking. But the reason I was saying you've spoken to Johnny Boy or whatever, I need some news, don't we? Need some news on these companies.
Yeah. No, to be fair, Gfinity, But the thing is,
turnaround.
I don't want to see news in this market. It's like you are pee in the wind, pretty much. It's like so. Let the sellers sell. Let them exhaust themselves. Because I saw on Twitter, one of the things that always surprises me at the market is how fast fear changes into fear of missing out. And all of a sudden, the people who've sold because they panicked start to buy a bit higher up. And stats bear this out. Do you know what? I was just looking up. When you have sell-offs and your stocks go down, you do more research. You tend to be more complacent when the market's rallying. And you buy higher prices, and you're less discerning about what you're buying when the markets are all rallying and all bubbly and all that stuff. So when the markets go down, you tend to reanalyze your investments, think, are these good investments? Is the market okay? And am I doing the right thing, holding on? And I was looking at just some of the stats. And JP Morgan has come up with stats there, and it was in timing the market, beats trying to time the market. And this is a classic here. And they said from a 20-year period, listen to this now, stats says, 20-year period from January the 1st, 1999 to December 31st, 2018, if you missed just the top 10 best days in the stock market, your overall... No, but it's different. This is different.
Different to last week?
Yeah, your overall return, this is the last 10 years, this is a more recent survey.
Right.
So your overall return, just missing 10 days, overall over 20 years, missing 10 days would cut your returns in half. In half! Over 10... And the odd thing is, better stats than that, many of the big days come after the bad days. 6 of the 10 best days occurred within 2 weeks of the worst days. So it may not go down and bounce back up, because some people think it goes down, but bounce back. It doesn't. It goes down, bumps along the bottom for a bit, so there's no certainty about whether it's going to go back up. And then all of a sudden it starts to rally. One example, 2015, listen to this. The best day in 2015 was August 26. Just 2 days later, 2 days after the worst day was the best day. 2 days. So you can't just time in and out. So you've got to hold. And selling in these general market sell-offs is the worst time to sell. So why would you do it? There's only one reason why you do it. Steve, Pete, give me the answer.
Panicking.
Panicky Pad. Panicky Pete.
Panicky Pad. Is there not just a little part of you, though, that wishes you'd sold your portfolio completely before it dropped? Like the value of your house.
No, because you can't. It's like saying, as I'm saying, isn't it? If you miss out, let's say you got 3 balls in the lottery, and you got 3 numbers. If you win balls, but right. 3 numbers, and you missed out 3 numbers. So isn't it? Part of you would have picked 3 other numbers than the ones that lost. But you can't. It's like that. You can't time the market. It's really random and erratic. Thing is, if you were going to, the only way to benefit is have no investments whatsoever. Just sit and wait, and then it sells off. Where's the bottom? I don't know. Sells off. And when do we get in? And then because a good bounce is going to happen if you're in a bull market. But then when do you get in? And what do you get into? Well,
because Steve said, if we had cash, we'd go in. I have got some cash, not much, but a little bit. So, and I'm looking at some of those thinking, but when do I get in? And so it would be the same if I had sold out, and I'd be sitting there pretty with a lot of cash. But when do I get in? And I'd probably miss it. So
on the weekly webinar, I did my 5 conviction stocks, and I basically did. And I tried to keep it quite simple on 5 times revenue, and I said these are 5 potential 5 baggers. Within the next 5 years, and I could give reasonable metrics for that. And I said, so that's it's all about time frame. Just look at the future. I don't think about it right now, because if you look at that, you're going to lose. You're going to lose. You're always going to lose. And I think it's just looking at the potential. I don't know. I was thinking there. Okay, there's a sell-off. Okay, there's inflation, growth worries, there's COVID. We have that all the time. You have worries in the market all the time, macro worries, right? And I think rather than just stare at the screen and worry, it's a good cough that, Pete. He was in the background.
Thanks.
Like that. Steve was that straight in the mic. So I said, rather than just look at the screen and worrying about your portfolio, just think about, is this sell-off preventing me from doing anything that I could normally do? And if it's something you'd rather do, go and do it. Go and take the dog for a walk. Go look at the trees. Go for a run. Do something you want to do. Read an audiobook. Go for a walk. Just do anything that will prevent you from selling. Because we know dead people or inactive accounts do better than active investors who have to do something. So do anything to take yourself away from needing the urge to sell or do something. Because we are hardwired as cavemen. When you get fear. We are hardwired to take action. And essentially, when we're cavemen, if you saw a saber-toothed tiger, you'd get scared because it can eat you. You'd run. Yeah. You have to flight. With the market, it's wired differently. You have to do nothing. That's hard. That's very hard.
Yeah. Really? I mean, the thing is that you got to have faith in the companies
you got to have faith
in. Yeah, boom. That's it. Thanks, George. you got to have faith that you've invested in good companies at a good price, and just sit there, and hold and wait. And if you've got some extra cash, maybe put it in at some point, but I don't know when.
But the thing is, when people are worried and scared, that is when. Fear is our friend. Fear and uncertainty is our friend.
You could have put it in last week, and then you'd be looking at it now going, I should put it in now. But just try to drip it into it, I suppose, now, perhaps.
Yeah, drip it in. No, but scaling it and I always say this, on growing, improving companies, and I mean that on a revenue top-line growth basis and a margin basis. So I'm not talking about resource companies that have no revenue or pre-revenue tech companies that are all hype. That's dangerous, because those can really, take a massive hit. And I've seen some of the resource companies recently, they've taken a massive hit. And so I'm talking about I'm talking about businesses, actually. And there is a distinction between businesses and just trades and companies you can trade in and out of for a bit of a punt, But, but it happens over and over. It's odd. It's part and parcel. And in fact, I did mention it last week, but I didn't really refine the phrase or the tweet that I put out. I talked about turbulence in the market, and I said if you want to travel thousands of miles, the best way of doing it is getting on a plane. Now, with a plane, you will have turbulence. But you don't jump out of the plane, do you? You say, go open the door! It's going down, you fools! I said, sit down, you're the pilot. That doesn't happen, No. Now, if you want to get better returns on your money than the bank or anywhere else, you have to put it in the stock market. You will have volatility. You don't sell everything when there's volatility. That's part of it. That's the price you pay for better gains. Now, it doesn't seem normal. That's why I say it's 100% emotions. Because it's the emotions we have are flipped. Fear should provoke action. In the markets, it shouldn't. Either with the action you could top up maybe, but I mean, don't flee. Don't just jump out. Because not only will you lose by jumping out, you'll crystallise your loss. Then you'll probably miss the rally as well. So you've got a double whammy, and you feel even worse about it. So I would urge friends, family, say, look at this now. This is the kind of time. Like Rich Dean on the WhatsApp group. What's he doing? And I did say I try to be more measured. Say, Rich, is there anything that's preventing you from starting to invest? Because I can, I'll answer any question I can. Paddy's panicking a bit. Paddy comes across very calm.
I can't work out whether Paddy's genuine, because he's saying to Rich on our WhatsApp group, don't invest. You'll lose money. Is he being sarcastic? I can't work out now.
Paddy talks calm, but Paddy's got a panic gene in him. Yeah.
No, I did like when he came back and said, "Oh, careful, Steve, you'll get accused of panicking when you're just saying a neutral comment." But I think there might be an element. He might be a little bit panicking, but it's I don't know. It's not panicking. It's frustrating though, isn't it? Because you've seen some great rises, or we've seen some great rises in a lot of the stocks we're in over the past 12 months, and it's just a little bit demoralising to kind of go.
But those, if you look at your gains, like my gains, are phenomenal. But you can't. But that's last quarter gains I had was amazing gains I had. But you have to understand. That's without a big sell-off. Now, sell-offs happen. So you're going to have to take a bit of... You can't just keep winning all the time. So you're going to have to take a slice of the top of that and say, okay, listen, there's going to be a bit of volatility. I have to reduce those gains by about 10%, over the year, pretty much. Because it'll rally again, of course. And even I said on the webinar, try and think in quarters minimum. Think, okay, the second quarter's just gone. I've done okay. This quarter started off quite rough. How will it be towards the end of this quarter, though? So be a passive fund manager and say, fund managers will give quarterly updates pretty much. Well,
unless your quarter's fallen now, in which case you'd be like, oh.
Yeah, no, but I mean calendar quarters. So, January to March and and all that. So just think in those time frames because there will be drops. That's part of it. But I mean, so let's say at the best time of the year, let's say you're in small caps and you're up by 50, 60%. That isn't a realistic long-term goal, 60% a year. Because I'll point out that Warren Buffett's only achieved about 20% a year. He's got a big amount of money, so over 60 years though. So if you are doing 60% a year, and I mean, in fact, let's get a calculator. If you do 60% a year, you'll be a billionaire in no time. So if you like, let's start off with 10 grand, and this 1.6 equals 16, 2, 25, 3, 4, 5, 6, 7, 8, 9, 10. So a millionaire in 10 years. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You'd be at 50 million in 20 years. So
what,
is that
on 10 grand?
No, on 60% gains. So what I'm saying is that isn't realistic. But so what you're going to look at is what else would you do with your capital?
So that was 60% gain on 10 grand over
20 years. Yeah,
20 years.
So you got to look at this, right? What else would you do with your capital, your money, your cash? What else would you do with it? So if you're going to put it in a bank, you're literally not earning more than inflation. So that isn't realistic. That's why the markets are quite good at the moment, because there's no interest rates around. There's no savers. There's no point saving. What else do you do? Start a business. You need more capital than that. Pretty much start a business, and then that's high risk. You're all in. Invest in the stock market. Okay, then you can get a fund that will give you like 8%, a tracker fund. If you want more than that, you've got to go individual stocks, and you can get sort of 20% maybe, or 15, 20%. But if you want more than that, you've got to go higher risk. And then a smaller cap. But obviously you have to have quality filters then. But I mean, it isn't reasonable to think you'll always average. Like I've averaged in the last quarter 22%, and over the last year I did like 200%. That isn't realistic. I understand that the bigger my portfolio gets, I'm not going to achieve that. And I'd be very happy now from this level to get anywhere to 20% a year.
Why the size of your portfolio doesn't affect that? It's all relative, isn't it? So
no, because if you want bigger gains, you have to go bigger. I mean, I'm very now. I can't. That's what I'm saying. The reason why I've got high 5 conviction stocks is that I can't just jump out of the stocks until I get really big and there's lots of liquidity.
Oh, I'm sorry. Yeah, yes, sorry.
So like for Buffett, for example, there's not many stocks you can just trade in and out of at his level. Only Apple's one of that. So so an Apple's not going to gain to 300% in a year, even though it does quite well. But
and he's probably lost this value of his house, and his house is much bigger.
Yeah, but so any big really good stock. Like if you look at the drawdowns on Amazon, on Netflix, any of these stocks have gone to stratosphere. Tesla, for example, they've had massive volatility in those.
Yeah,
and I'm talking about you could be up like 400%, and they've dropped by half of that in like 6 months or something. That's the kind of volatility those stocks had. So
I have a question for you. So absolutely, your 5 stocks there and that. But with perhaps you haven't got a huge amount of spare cash, but are you looking at other opportunities? Because there could well be other opportunities being presented at the moment because of the drop. Or are you just literally not looking at your portfolio?
I've looked a little bit to see how much I've lost, but I'm doing it much as a reference point to see, so going forward in about, by the end of the year, I expect me to hit new highs. I really do. But I look back on this and think
other stocks?
Well, I'm getting that now. But I look back on this point and say, look, my portfolio dropped by this amount in the third quarter, and it's still now back above the highs in the fourth quarter. So I want to do that just to prove to people holding good companies for long term pays rather than trading. But I always look. But I've got 5 cracking companies, and I believe they will. And it's very hard to find companies that I genuinely. And I said this. I mean, obviously, you watched the webinar, so you're asking this question because you watched the webinar and you're coming back on this question. But people ask.
Yes, that's it. I was just wanting to clarify that point you raised at the webinar.
I had the same question on the webinar. Someone said, "Well, look for any more new stocks. Whatever new stocks comes along." I said, "Well, I have to be super convicted on it, but I believe I'm going to get excellent returns on the 5 stocks I hold." Why would I go chopping and changing around? Because largely that's been my problem before. I've been too impatient, Gfinity will rocket. I've got to have patience. That's all I've got to have. I believe all the other companies, Escape and Polarian, all those will do very well. Truefin, I believe that will do well. And Biome Technologies, I think they all do well. I've just got to be patient. Now, if I find something that's very good, I think it's an amazing opportunity, and I think it'll get a lot more return than the ones I've got. Fair enough. And maybe top slice, but I mean, I've got to be super convinced on it because I'm already invested, and I can't just chop and change now because I've got too much.
No, and I wasn't saying chop and change, but you are fully invested. You don't have spare cash. I mean, sell one of the kids or something or whatever, or sell the shed.
I've got no spare cash anyway, so
Right, okay. So it's a hypothetical, but if you did have some spare cash, would you put it into one or more of those 5, or would you look for others?
Genuinely, if I didn't have, I got big chunks in all of those. Any one of those does well, I can do. It'll set me up nicely. But I mean, if I had money right now, I would be buying. For example, the fall off the G50 is ridiculous, and even Escape Hunt, that when I see a dip like that, 12% on a couple of trades, I would have bought into that, because I say anytime you in a conviction stock where for one day it drops by 12% off no news, basically someone who holds a decent chunk, maybe selling a few, I'd buy their stock pretty much. Yeah, I would.
Yeah. Okay.
So so Escape Hunt now is what? I did say that recently. What did I say on the thing? I said I tweeted out basically that Steve, what are you doing now?
Yeah, Steve's like making his dinner.
Are you making dinner?
No, I'm taking a leg off a coffee table.
Are you diversifying? Too many legs on there, is it?
Steve, don't do that. It'll fall over.
Yeah. Why are you taking a leg off?
It's broken.
Is this the best time to do that?
Well, to be fair, I didn't think you could hear that because it was quite a silent procedure. If I can hear from my end, so it's just one of those things. It's been sat in my living room for ages. I thought I'll crack on with that while we're just talking.
So is that the case? So Steve did a podcast, right? I got an hour to do some some DIY while the podcast is going on. That's good. That's how Steve allocates his time now. I can do some DIY now. So I said, I said this: I said, one person sells because the price is going down, another person buys because the valuation is improving. Which one are you? And if you're looking at the valuations of Escape Hunt, it did drop by 12%. It ended up by 4.3% down. It dropped by 12%. The valuation went down to sub 27 million. That's ridiculous. So it's like in a couple of years' time, multiples of this. Why would you? Of course, I'd buy right now. I just think it's people. No, in fact, to be fair, I was the same when I started out, and I didn't know how to maybe, research that well and all that stuff, and I was unsure. I would probably have sold if the share price dropping. I think someone knows more than I do, or whatever. So I'd just sell. But now, then, that to me was that 12% drop was nuts. Just one guy came in, one trader, one holder, dumped 10 grand of stock or something. That was it. Because there was very low volatility on it. But fair play, the buyers came in there and went from 12% down to 4.3% down, and it's 28 million market cap. This is going to be, I'll reiterate, a global leader in escape rooms. Escape rooms is the new leisure activity that will be very popular. They will be the global leader. Name a market leader globally that's now at 20. This is honestly, this will be triple-digit market cap. Oh, sorry, I don't know.
Are we going to rebrand this podcast the Escape Hunt podcast? Then?
No, but there's others. It's like Polarian. Polarian dropped this week. It was threatening to break £1, and it dropped. And you think, well, hang on, what's changed then?
Yeah,
what's changed?
Nothing's changed with anything, is it? It's all just going down.
And so Vadim Alexander came on the pod. He's head of healthcare at SP Angel. He knows about healthcare, and he said, Renalytics, which is a company that's UK based now, Nasdaq as well listing. It's a £1 billion company. It has less similar potential or less maybe to Polarian, right? Just because Polarian is not listed in the US, it's valued sub 200 million. And this is a company that has global significance, in medical, imaging, and especially with long COVID, even the market's got even bigger. So yet this sell-off is nothing but an opportunity. It's like, buy it up. If you believe, and not only that, I mean, if you don't believe that there's a chance they may not get FDA approval, their brokers put it at 90% probability. You'd bet on horses like that all day long. 90% probability, but the share price will rise towards that. So I would buy like crazy if I had cash now, and I would, if I was overexposed massively, I may take some off just before the approval because I think the share price will rise. But I think that is like, like I said, I've done a video on it. I think it's FTSE 100 company in the making. There's not many like this out there. And even like Biome is now down to less than 2 times this year's revenue.
Yeah.
Less than 1.5 times next year's revenue. They're in plastics. It's going to be huge. It's just the start of the trend,
So, like this whole this whole downturn, if you like, of the micro caps and the rough time we're having. What do we think? What do you think in terms of what will trigger a turnaround? Like, is there anything that will stop the rot? I mean, what's crystal ball time? You know, what's the?
I don't know. It's just
the outlook.
One of those things happen where, for example, it could be anything, you know. But I'm always surprised how fast fear changes into fear of missing out when the market starts to rally. And not only that, the other thing that surprises me is how fast people forget about the fear they were selling on and just start buying a lot of people at a higher level. They go, why are you now buying now when you were selling and putting your pants a month ago? Because it will. It'll bottom out all of a sudden. People think, oh, and also you get. I talk about this in the podcast. Pain tolerance. The longer you're in the markets for, you have a bit more tolerance for pain. And there's been studies out there saying when you lose as an investor, you lose money, it's twice as painful as the equivalent gain of the pleasure you'll get from the gain. So the hurt really hurts. And that's why people sell. They don't like it. They're in the market to make money. When the opposite thing happens, they start to sell or panic. But it's the worst time to sell. You know, it's absolutely. And in fact, you are crystallizing your loss and your pain. So it will change. Something will happen. Like, for example, there's a lot of worry at the moment about growth because there's COVID going on, Delta variant. I mean, and there's inflation fears. Those kind of things always happen. And they are genuinely, looking at it longer term, always opportunities. And look at the stats. Everyone's saying today, you know, BBC, for example, what they like to do is round figures. You know, BBC, Sky News come out with cases have gone above 50,000 for the first time since January. You know, and people go, oh, sell. We're going to be locked down again tomorrow. You know, and people are buying. But I looked at the stats, and this is the stats. So obviously there's more issues, long COVID and all that, which will help clear in. But there's 51,870 cases with 3,964 patients in hospital, right? So 51,000 cases, close to 4,000 patients in hospital. That's 7.64%. The last time there was 51,000 cases was on the 7th of January. Patients in hospital then, 26,000 compared to 3,900. So that was 51%. So basically, it's a 44% drop in cases to hospitalizations this time round compared to the last time round. Now, sooner or later, we can't keep locked up. You know, we've got to unlock to a certain extent. And I don't think, and 9 in 10 people have antibodies and all that stuff. So it's about the NHS, isn't it? And I think the NHS can deal with 3,900 patients because there's 180 hospitals in the UK. So if you divide that out, it's not a huge problem. Whereas before, you know, there was a majority of people in hospital had COVID. So you've got to draw a line somewhere, haven't you? And I just think it's not as bad. Your cases will go up, but hospitalizations won't. And deaths are not rocketing. So, you know,
you got to think that. Yes, I agree. Yeah. And hospitalizations will go up, but not as crazily as they did. Well,
7% now, or let's say 8% now are being hospitalized compared to 52% before. So that's and understand 80% of people dying were above the age of 80. They were quite frail people who needed vaccinations. Without a vaccination, they would die. Now they're vaccinated. You know, some of those will still die, of course, because they're weaker. But and I understand there's more complicated cases. The younger people are now getting COVID, long COVID. But I think we have to get towards a point where we are treating it like flu because the majority of the people are vaccinated for the first time, or whatever, and that's the way to go. So they will keep talking about the cases, but is it can it be dealt with by the NHS? If it can, it's fine. We have to unlock. There are businesses going bankrupt. There are people out of work. There's depression. In fact, you know what? When we come to TV recommendations, we'll talk about something related to that. Anyway, is there anything we haven't talked about? Or
no, I think that's pretty much it, isn't it? That's depressing enough. Yep. Steve, what are you up to now?
Oh, hang on. One thing I want to say is, you know what? Is there anything in the world we're in right now, right? Whereas people are suffering, there's problems happening around the world. Is there anything more pointless than billionaires going to space just because they can. What are they doing? They're not achieving anything.
Who cares?
Well,
like,
they're adding to climate change.
I know, they say, we've got so much money, we can't spend enough on this planet, so we're literally going to set fire to it in a rocket, propel us into space, just to prove how much money you can actually waste. What is the point? I'm sick of it. Branson and Musk, in fact, Musk is not to say, he's doing more commercial stuff, but I mean, Bezos, get lost, you dickheads.
Yeah, no, I totally agree. Yeah, absolutely.
I hate it. Twitter poll, by the way. Twitter poll.
Right. Yep.
How long do you expect the UK micro... In fact, that's your question you asked. How long do you expect the UK micro small cap drought to last? Another week until August, until September, beyond September. So another week, 11.7%. Until August, 22.7%. Until September, 39.5%. Beyond September, 26.1%. So the winner there was until September. And in fact, the majority is longer. Now, what's your thoughts on that?
Well, I think people are just putting their options in, saying it'll be longer, then hopefully it'll be shorter. So
people are being pessimistic, and then,
that's the way I'm looking. Yeah. So I think being optimistic about it all, but
you know what? When you ever do these sentiment surveys, they're very contrarian, because as you know, the herd are wrong.
Yeah.
If you want to beat the market, you buy when others are fearful.
Yeah.
So if people are really fearful now, that says to me it's now time to start scaling in if you haven't scaled in, because generally the best time to buy is when people are really scared, and so the fact that the majority of the people think it's going to be longer, that's a good sign. So because the majority of most people have, the reason why they're voting this, but they've pretty sold. It's going to be longer than that because I won't get in now. I'm sold out.
Yeah.
So it's a good thing.
What was your answer to that?
I can't vote because I set the vote.
Yeah, but if you were voting,
I'd say we're going to sell-offs don't. Sell-offs last for 3 months. The sell-offs don't last for 3 months generally. The sell-offs last for a week, 2 weeks, 3 weeks. And they grind lower for a little bit. Then they bump on the bottom for like a month and a half or whatever. And then that's the time to start buying, and then they start to rally. But I think before August to start to rally, because you can break down the year into two areas that you get your better returns. The best returns, generally on the indices, are from September to April, and the worst returns are from May to August. But there's still returns there. You still get positive returns generally. But so if you're going to bet on one half of the year, you go from September till April, but people tend to get in before that to capture early gains, so I think the money will start coming in August time, I think, July, it'll start dripping, it'll be less selling, but the selling will dry up, so there won't be more falls. I think it'll just be bumping along sideways, be fine. Some of your stocks will rise, some will go down. It won't be all down like we've seen, so it'll be a balancing of the portfolio where some will rally, some won't, and then all of a sudden, whoosh, it'll start taking off.
Okay.
People say, nice liquidity in the market, and then it'll start taking off again. And then the people who sold a while back, they go, I should have just held, really.
Yeah. Okay. Good.
Steve, TV recommendations? Let's see if he remembers.
Probably it's a new thing on Amazon Prime. It's what's it called? Oh yeah, what's his name from Top Gear? Clarkson's Farm. It's all right actually.
I don't really like Clarkson.
No, I don't like him.
No, watch it though because it's all right. So
you like him though, don't you, Steve?
Not really, no, but I like him in this.
What is it? What's it about, Steve?
What's it about?
He's bought a farm, and it's about him kind of running the farm for like a year and a half, 2 years.
Why is that? Okay. Why is that? Yeah. It sounds boring. That
it does sound boring, but it's actually all right. Yeah.
Well, he actually does all the farming.
Yeah. He does the farm, and he's got some other people who farm with him.
Did you learn anything about farming?
You do. Yeah.
Do you like him now?
No.
Oh, okay.
Yeah, I saw a tweet on that actually. Maybe a second series come out. He said, there's not guaranteed. Maybe a second series. Yeah. I would point you to on the treadmill day, sweating. It's weather, eh? What's the weather like at the moment? Whoosh! Hey, No, I did say that in the web. That was a good analogy. About 3 weeks back, right, I got the BBC weather app. It's better than the normal standard app, weather app on the phone. And it gives more detail. But I looked about 3 weeks back. I looked at the weather app, and for 2 weeks, it was rain. And I ever done that? Scroll through and there's no sun. What? And it was raining the day. And then that is so depressing. That is so... I mean, literally, there was a bit of sun behind a cloud but with rain. That was the best there was. There's no sun for 2 weeks.
Right.
And sometimes when the sell-offs happen in the market, and it happens again and again and again, you think, it's never going to rally again. But listen, I didn't delete the app. I didn't sell my shorts and my T-shirts because I know the sun's going to come back out. But at the time, 4 days into the rain, it was still the app was still sort of dodgy. And then about a week ago, it was like heat wave, sun for a week. That's the way the market will turn. So all of a sudden, we'll get rallies. And it'll be rallies on rallies on rallies. And you'll be back to where you were before you know it. And then it'll be back to highs. It seems like it won't happen right now.
That's actually quite a good analogy. I like that.
Yeah. And no, that's it. It seems like it won't happen right now, but it will happen. The sun will shine again. It always does.
But it'll then turn cloudy and the thunderstorms will come back. And
there's always turbulence.
Awesome.
There's always turbulence and volatility. Yes, always that. Yeah, but But you know what? Everyone wants the stock market to go up. The majority of people want the stock market to go up because people are invested, people have businesses, they want to improve, and get money to improve it. They find new ways. So by far, the opinion is on improvement and growth rather than selling off. So with all the world pulling together and wanting growth, people want to earn more money, get rich. So that's the way the influence is towards the bull side more than the bear side.
Yeah. When it comes to weather apps, I like an app called Weather Pro because it's actually got a satellite image and you can see the actual clouds coming in the rain. Just FYI. I think it's better than...
How long do you look at that for?
Oh, every day. All the time.
For hours.
Hours.
Clouds coming over.
Here it comes. Yeah.
Look out the window. Is it there? There he is. Hello. I just saw you on the satellite, fella.
I just seen you on your... Hello, cloud.
You're famous now. You're on the app.
Yeah. Right, anyway.
TV recommendations for me. I was on the treadmill there, sweating like a piglet, and Netflix, Money Explained. I think it's episode 3. I think it is gambling. The entire episode is very good, and it talks about dopamine, why gamblers gamble. It's not about the winning; it's about the expectation of winning, and even if they don't win, and there's sad stories in there. But there's a guy there who wrote a book. He's from MIT. Do you know what MIT is? Yeah. It's very well known. Massachusetts Information Technology campus or university. They're very eggheads, the best out there. But
where is that?
It's in Massachusetts.
Yeah, go on. Which city?
Massachusetts.
Okay. Boston. Anyway,
Don't be rude. It's a family podcast, Pete.
Yep.
But anyway, guy there, he wrote a book on basically how to... He said gambling is gambling, but one of the best things you can play is blackjack, card counting. And he gives his book, he tells you how to do it. Basically ignore, I think it was the cards 7, 8, 9 or 5, 6, 7 or something like that. Ignore those. But if you have low cards, give them a plus point, like 1, 2, 3. And if you have high cards, give them a minus point. So when the points are at a certain level, when you get double-digit points, that means there's no high cards have come out. Then is the time to start gambling big. But they also want investing. And he says, this guy said, no, day trading is gambling. And they talk about Robin Hood account, which went berserk during the lockdown. People at home gambling from home because they couldn't go to casinos. And just really scary about gambling. And he said basically investing over time works, but day trading is just gambling. So very interesting. Money Explained, episode 3 on Netflix called Gambling. It's very good. But anything you've watched, Peter?
No, this time of year is more. I just kind of watch a lot of sport, really, because Tour de France has been on, the Euros have been on, tennis.
I've heard about Tour de France, so I lost track. I was listening to Radio 5 Live, and I tell you who came. No, I was watching BBC News actually on the treadmill, and Chris Boardman came on and gave an excellent description, and made me. He sold it to me. I didn't actually watch it though, but he did sell me the story of the Tour de France. He said every year there's many stories that go on. And he was talking about a guy who had broken something or whatever, put his arm out and put it back in and cracked on. That happens all the time. And then he talked about what's the guy that was winning the sprint guy?
Mark Cavendish.
Cavendish, yeah. What's happening there?
Well, he's winning the points jersey, the green jersey for sprinting. And he's like 35. He's come back from I was going to say back from dead, but that's not right. Yeah, everyone thought he was
going to give up, wasn't he? He was going to give up.
Yeah, and he's been really ill the last few years. He's had illnesses, and I can't remember what the illnesses he had, but anyway, so he's been out, and he's just come back and regained his form, and he's winning and doing well.
Hang on, are they still riding?
Yeah, it finishes on Sunday in Paris.
Bloody hell, that's a hard thing, isn't it? It's still riding.
It's 3 weeks. It's nuts. And the thing with Cavendish and people like that, sprinters, is they're not built to kind of go over the mountains, and they've got to get through all that. In order to win the green jersey, you've got to complete the whole thing. So he's got to get in within the time frame, because there's a time cut off each day.
Yeah.
And so he's been climbing the mountains, his team's been helping him over and all that. But then the other end, the overall classification, which is known as the general classification, you got this guy Pogačar, who's Slovenian, who's like 6 minutes ahead of everyone else. So there's all a lot of debate over
drugs.
Yes, and all that, and so that's a little bit.
The thing is, you can't be that good, can you?
Well, it does seem pretty amazing, but Chris Boardman did put a good case together in terms of looking at his data and how this kid has been. He's only 21, 22. He has been great ever since he was a junior, and his result. He's not like he's hidden away.
What I say though is, where's he from?
Slovenia.
There we are. Question mark there, right? Because let's be honest, Eastern Europeans. Let's be honest. Their health, everything there, their standards, they don't care. They'll cheat. They will cheat.
Here's the other thing, right? In the last couple of years, there's been him and another guy called Roglic, who is also Slovenian, and he's also right up there, but he's crashed out this year. And it is a bit, should we say, interesting that two people come along from a very small country at the very same era, and are both doing exceptionally well. But hopefully,
have they got the same coach?
Well, exactly. I don't know. I'm not sure, but.
Of course they're on drugs. It's like when someone... I'm not joking, right? There are humans out there, ordinary humans that achieve extraordinary things. But this is, when you do something irregular and they achieve something extraordinary. But when you have a very competitive field of humans pushing themselves to the limits, and then someone is way out in front, like Armstrong was.
Yeah.
There's something, awry there, because you can't do that, because those people doing that are really hard working. They're super fit. They're unbelievable. They try and get the best advantage in any way they can. Wheels, tires, hair, helmet. And they push themselves physically as much as they can. We've only got a certain amount of muscles in our bodies and lung capacity and all that stuff. How can this guy be 5 minutes ahead of everyone else?
Well, the other thing is that like Roglic and these others have all crashed out. Like Geraint Thomas crashed earlier. He's still in it. He had his shoulder pop back in and stuff on the third day in. And so a lot of people have kind of wiped themselves out. So it's kind of exacerbated Pogačar's kind of lead. It makes it bigger than it kind of perhaps would have been if some of these guys had stayed on form. But it is a bit bizarre. And the one thing is that he said the classic line, or he said a couple of times the classic line of, I haven't tested positive for drugs, which is what Lance Armstrong used to always say.
Yeah. And do you know what it is, essentially? Do you know what it is?
I haven't been caught yet.
No, not only that. So what's the secret? Essentially, we got a drug that's undetectable. It's fantastic, you silly sod.
Involved.
Yeah, you get Russians involved. Very good guys working in the laboratories who come up with this drug that's undetectable till yet. So that's why we're so good.
Yeah, so anyway, but there we are. But hopefully, he is a medical marvel, and he's just a physiological specimen.
There are just people out there like that, Look at myself.
Steve's a good sprinter, actually. No, but I still feel Lance Armstrong, even with the drugs, actually, I still think he's amazing. I don't know why I think he has drugs, but I don't know why. It's like, well, sort of, because I genuinely think sometimes there must have been a wall on it, surely, in that camp, surely.
He won the sport for cheating.
Oh no, but back then, but that's the thing. Back then during that era, yes, they were all. So in a way, all on it. So, or like 99% of them were on it. So in a way, it was a level playing field, wasn't it?
Yeah, so I'm saying. So I've often said this before. I remember saying this on Capital Radio, and Johnny expanded very well. And I said, why not have 2 Olympics?
Yes, yeah.
You know, one Olympics for straight people who don't take any drugs, and one Olympics for people who can take as much as they want. So you get these people coming on with biceps everywhere, muscles come out their nose even, really deformed, and they throw a shot put like 6 miles, or they run 100 metres in a second. I would watch that. But because if they're consenting adults, they want to do it, they can do it. But let's not get mixed up, let's not blur the lines, let's not pretend you're clean when you're not. If you want to take drugs and see how far you can push the body without exploding, crack away,
Yep.
Don't think that'll ever happen. There we go.
No. But do you know what? I would like to see some kind of billionaire, rather than go to space, sponsor that. Just drugs in sport. And that's been more entertaining for people sitting at home.
It's almost getting a little bit close to the Hunger Games, isn't it?
Yeah, but Branson was just on a plane. I don't even know in space, is he? It's a plane. A rocket to me is upright. It takes off upright, goes up, and lands with a parachute. He was in a plane. I said, Branson, it's a plane. You went a bit higher than normal commercial flight. There wasn't even really... It wasn't even dark outside. That's not space.
He could have just gone into one of those air dome things that you went into,
Yeah. He's on the edge of space. Thing. Well, do you know what, Branson? I'm on the edge of being the best investor in the world. I'm not quite there. You're on the edge of space. Just get into space and explode. That will make the headlines. No, there's no risk on his part whatsoever. And anyway...
Yeah.
Lovely. So anything else? Any plans for the weekend, Steve?
I might go for a barbecue somewhere. I've not really planned anything. There's a few things going on, but nice weather.
Yeah. He gets most of his DIY done during the podcast. So
that's all done now. Relax the evening now. He's
sorted his coffee table out, built his barbecue. It's fine. Marvellous. All right, boys.
Nice one.
Speak to you next week.
All right.
Bye.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.